Hey everyone, and welcome back to the channel. Are you looking for a way to generate consistent income from your stock portfolio, something that goes beyond those often paltry dividend yields? Well, you've landed in the right place. Today we're diving into a powerful strategy that could put hundreds, even thousands, of dollars in your pocket each month with just a small capital, and it might be simpler than you think. Now, many investors turn to dividend stocks for that sweet, regular income. And while dividends are great, let's be honest, the returns often leave something to be desired. You might be looking at 1%, 2%, maybe 3% annually. That's like waiting an entire year for what we could potentially generate in a single month. Imagine earning close to 3% on your investment in just 4 weeks. That's the kind of potential we're talking about today. How, you asked? By leveraging a smart and strategic approach called selling covered calls. And the stock we're focusing on today? None other than the semiconductor giant, Taiwan Semiconductor Manufacturing Company, or as most of you know it, TSMC, ticker symbol, TSM. Now, TSMC has been a powerhouse in the tech world, and recently it's seen a significant surge. In fact, just today alone on the 2nd of May, the stock price jumped by close to 4%. That's fantastic news for shareholders, but it also presents a fantastic opportunity to generate some extra income. You see, when a stock you own experiences a strong rally like this, it can be a great time to consider a covered call strategy. Why? Because you can capitalize on that upward momentum while also generating income. It's like having your cake and eating a little slice of it right now. So, here's the exciting part. TSMC is currently trading around $180, and the 4-week call options with a strike price of $185, that's just a little above the current price, are trading for around $5. Let's break that down. For every 100 shares of TSMC you own, by selling just one of these call options, you could potentially pocket $500 in the next 4 weeks. That's right, $500 for essentially leveraging shares you already hold. Think about that for a moment. $500 in potential income in less than a month. If you were to repeat this strategy consistently and with a bigger portfolio, that could translate to some serious extra cash flow over the year. Now, some of you might be thinking, what exactly is a covered call? In simple terms, it's a strategy where you sell call options on shares you already own. This gives someone else the right, but not the obligation, to buy your shares at a specific price, also known as the strike price, by a certain date, also known as the expiration date. In return for giving them this right, you receive a premium. That's the $5 per share we're talking about. Now, I won't go into all the nitty-gritty details of how covered calls work in this video, but don't worry. You can check out our comprehensive video on covered calls that breaks down the mechanics step by step. Make sure to check it out after you're done here. But let's get back to the opportunity with TSMC. We've seen a nice rally, and by selling this $185 call option, you're essentially saying, I'm happy to potentially sell my shares at $185 in 4 weeks, and in the meantime, I'm getting paid handsomely for it. Think about it. You're taking profit after a rally, but instead of just selling your shares outright, you're getting paid extra for the possibility of selling them at a slightly higher price. It's a win-win situation. If the stock stays below $185, the option expires worthless and you keep the premium. You can then repeat the process. Now, let's take a quick look at what that $5 premium per share looks like on a real trading platform. See that? That's real money on the table. And for those of you holding 100 shares, that's potentially $500 landing in your account just for selling one option. Imagine the possibilities if you have a larger portfolio. This strategy can generate a truly significant and consistent income stream. This isn't some complicated high-risk strategy. It's a smart, calculated way to leverage your existing stock holdings to generate consistent income. Especially in situations like this, where we've seen a strong upward move, selling covered calls on quality stocks like TSMC can be incredibly lucrative. So, if you're tired of those tiny dividend checks and you're looking for a way to generate real, consistent income from your portfolio, I urge you to consider the power of selling covered calls, especially on a strong company like TSMC after a solid rally. Do your own research, understand the risks involved, and consider adding this strategy to your investment toolkit. Don't forget to like this video, subscribe for more insightful financial strategies, and definitely check out the detailed covered call explanation video linked. Thanks for tuning in, and I'll see you in the next video.